Okay, so this is Joshua with I Cut Grass LLC, and it's February the 16th, 2022, by 11 o'clock, or excuse me, 11 o'clock in the morning here in central Indiana. If you haven't subscribed to my page yet, I would ask that you please consider doing that. I am going to try to, today what I want to do is I want to talk about merchant loans briefly. I'm improvising this video as I go along, meaning that there's nothing that's scripted. I haven't created an outline. I haven't had the time to do that, but I've been seeing a lot of these text messages. Guys are receiving these text messages. I've received them over the years since I started in business. I want to talk with you based on my own experience why I think that they are ultimately bad for you. Please like the page if you have, or the video. More importantly, please subscribe. And if you know somebody that you genuinely think will benefit from this, share it with them. The idea here is just to share with you my experience. Take it or leave it. Maybe it's good for you. Maybe it's bad for you. Maybe you've had a positive experience with a merchant loan. That's fine. But I'm going to explain to you why I think that they are bad. First of all, merchant loans typically are bad for you because they're the type of loans that are more considered more high risk. Usually people that take merchant loans can't get a traditional loan through a normal bank, for example. And so these companies or these private investors will offer what they call products, which are loans, that end up ultimately at the end of the day, when you pay them back, you're paying a huge chunk of money above what you took, with a tremendous amount of risk that's put onto your business, and then fees as well. Fees are huge, okay? And typically what happens is they'll set it up to be repaid over the course of 3 or 4 months, 6 months, a year, or whatever, with daily debits being pulled from your account Monday through Friday, with exception to holidays, okay? So they might come in and say, hey, I can give you $20,000, and don't do the math on this. I'm just using an example because the math isn't going to be right. And you're going to pay me back, $165 a day, Monday through Friday, until the terms of the loan is repaid. And when it's all said and done, you end up paying $32,000, $33,000, $34,000 back to the vendor. And what happens is guys can get into situations where maybe they go out and they say, hey, I do lawn care, I do landscaping, and I could use a mini skid steer. It could really help me to do it. So they take a merchant loan. But the problem for taking a merchant loan for this type of equipment is that doesn't guarantee that you have the work. All of a sudden, you might get the loan and you might have the equipment, but you don't have the ability to repay the loan from the additional income that you would have earned if you had jobs. And so people start to become crushed over time through these daily payments. Because keep in mind also that if it's 6 months, or depending on when you took the loan out and depending on the life of the loan, there may be situations where for the entire winter, for example, you could be required to have those payments come out, and it creates a lot of stress on you. And all of a sudden, instead of owning your job, you're an indentured servitude. And how these typically work is they don't work on you selling them anything other than your future sales. So all sales that come, that's how they try to cover their rear end so that they're paid first, because a contract is set up in such a way that whatever you are selling each week, whatever you sold, they have access to that. They won't pull it all, but if it came down to it and you defaulted and they went to court, you could have a judgment. You could be in some serious trouble. So you want to avoid them. They're just not good for you. A better idea would be to take a small amount of money, $5,000 or $10,000, and instead of going and buying a zero-turn mower or whatever, giving it, to a marketing company that can go out and get the business for you, because that's the way that you're going to grow. So many times guys go out and they start a lawn mowing business, and they'll go out and they'll finance new lawn equipment, and they don't have the workload for it. Or I'll see guys that are going to do residential properties that are 5,000, 6,000, or 7,000 square feet in these, in suburbia America, but they go out and they buy a 60-inch lawnmower, and they buy a tandem trailer that's 20 feet long, maybe even an enclosed one. And then they're, pulling it in a ridiculously expensive truck instead of using, a cheap truck. And there's nothing wrong with expensive trucks, because typically, the value of a truck, it also has some influence on its, dependability. But the point that I'm getting at is people are spending their money the wrong way for the business. Normally I would encourage people just to bypass new equipment altogether and buy used equipment. But the problem that we have right now, after the COVID shutdown, after dealing with the supply chain issues, and now dealing with inflation, it's hard to get anything new. companies don't even have them available for people. You're waiting 4, 5, 6 months for a lawnmower. And then all the used equipment that people are posting online that you typically can find on Facebook Marketplace or through Nextdoor.com or driving down the street. Instead of, paying $500 for a $500 lawnmower, you're paying $3,000, or they're asking for something absolutely ridiculous. I saw a Ford F-150 for like 120 grand the other day. Just absolutely ridiculous what people are wanting, and that was for a new truck, but just ridiculous for what people are wanting. I mean, it's like in many places you could buy a house and never have a mortgage payment again. You might not have an outstanding house, but in some places you can, because it depends on where you live and the demand for the product that's available. So these merchant loans will typically have you take and show them 3 months of your most recent statements, which doesn't do you any good, because if you're a lawn mowing guy and here it is in February, then you're going to give them November, December, and January, which is the low time of your season. Unless you have consistent regular snow removal. Here in central Indiana, we have 2, 3, maybe 4 events over the course of the winter, and that's it. And so there's not a real substantial amount of money. You can make good money in a short amount of time, but it's not consistent work. So there's no way that you could provide them an accurate reflection over those 3 months specifically about what you're earning. So there are companies out there like Sheffield Financial that you can apply online, and oftentimes you can call them within an hour if they haven't given you an answer, and you can talk to a supervisor who can give you an approval. Toro has its own financing too available, but the problem I have with people using new equipment is especially if they're new, you don't know if it's going to work out for you. A lot of guys get started in this business, and then they get out and they get working, and 2 or 3 weeks into it, they're like, oh crap, this is hard work. And putting up with people's complaints that can happen from time to time, no matter how good you are, can beat you down. And it's going to be hot, and you might be working in dog crap or poison ivy, and it's really humid, and you're getting sunburnt, and you're getting oil all over you, and you're working around lawn chemicals. Even if you're not doing the lawn apps, you're walking through lawns that have been treated with it. And I've seen some guys cut grass in shorts. I don't understand what they're thinking, that they're not connected to what they're doing, and they're not considering their long-term safety. But the financing is an issue. Do not get involved with merchant loans. When I first got started, I did some merchant loans, and I never, ever defaulted on them. And you know what? Each time you would do one, they would say, hey, next time, if you pay everything back on time and everything, next time we can give you a better rate. It's bull crap, because 9 times out of 10, that company isn't around anymore, or the owner or the investor has since started a new name and a new business, so you don't even know that they're contacting you again, but through a different guy that's working on your behalf to help you secure the loan. And you'll never hear from him again once the work is done. Now you work with them directly. It is a parasite to your organization. Don't do it. It's not worth it, okay? Avoid it. Still, if you can, find something used. If you don't have the money for something used, if you can't find it used, and you can get financing, Sheffield Financial in many cases will offer, I've seen them up to 2 years at no interest. So you make something affordable, like $135 monthly payment, and you're golden. You got money coming in. But please give yourself a favor. The main thing I'm trying to hone in on this video, merchant loans. They are a joke. They are bad for you. It is not good for you. It places a ridiculous burden on you. I mean, think about it this way. Could you take out $125 every day, Monday through Friday, to go spend on anything you wanted to from your business account year round, or forever, how much time it would take for you to pay that back? And the answer 9 times out of 10 is no. So avoid merchant loans. If you have questions or you're curious, you're really considering it, please contact me through my email. It's icutgrassllc@hotmail.com, and I'll give you a million reasons why you shouldn't do it. But this is for you to succeed. Avoid them. Either use a traditional lender, okay? And if you can't do that, get something used. And if you don't have the money, write it out. Do whatever you have to do until you have the money to get what you want. And this is going to help you, it's going to help you at the odds of you being successful longer and being more successful, or more likely rather being successful, than having someone else suck the life out of you. Because what they'll do is they'll take your business if they can. They'll take your personal assets if you have a home, a car. If you're married, you don't want to get them involved in it either. Avoid the merchant loans. Subscribe to this channel, please.